Will gold have a 60% rally this year? I'll lay out one reason why I think it might. Is it still time for Ethereum to outperform Bitcoin? I believe so. Watch for more. Hi, and welcome to the Trading Pit, personal investing and trading tools for the active investor. I'm Lundy Hill, an ex-Chicago Board of Trade bond pit trader. Please note this is not investment advice and I am not a financial advisor. These are the charts that caught my attention for the week ending August 16th, 2025. First, let's go to the S&P 500. ES futures, here's a weekly chart. They followed through to new all-time highs this week, although on a narrowing of the range. We note that this week's range was much narrower than the last week. Still, as one of my early mentors, Sandy Stewart of Revco, used to say, new all-time highs is never bearish. Zooming in on the daily bars, we see the last 3 days have formed what my father called a dynamite triangle and also a reverse L formation. Both of these patterns right now are bullish. Note the similar pattern marked back in mid-July. Let's zoom in on that. And here's mid-July. It had 3 tight days followed by a wide range up day. And the 4th day carried prices up almost 2%, or 111 points. Note that it carried out of the triangle by an amount almost exactly equal to the wave into the triangle. I've labeled that with gray or dark black lines to show the projection out. Going back to current price action, here's the dynamite triangle, and we use that projection on current prices, and the wave into the triangle is 117 points. Projecting that wave out of the triangle gives us a short-term 3 to 5 day target on ES just shy of 6,600, so that's a nice gain. I'm still bullish on ES futures. This is a chart I did a couple of weeks ago. This is the large cup and handle pattern that ES has traced out over the course of the year. You can see a clear pattern, a clear cup and handle pattern with the handle of last couple of weeks. The cup and handle pattern buy may have been broken this week when prices went down to the bottom, back to the handle. The only thing holding back is a break of the handle low. That is the line in the sand, is that lower line on the handle pattern. Next, let's go to NASDAQ and the NASDAQ 100. I like the NASDAQ micros and the NASDAQ minis. Here is last week's chart that I highlighted. Zooming in, I showed the 2-bar flip-flop, or actually almost a 99%er pattern. This is 2 bars ago, was a wide range, low close down bar. And then this last week, or the prior 2 weeks ago, started with a gap up open, which was the low of the day, and a complete rally all day to close near the highs of that day, which reversed not only the prior week's close, the prior week's open, but the prior week's high. So that's a 2-bar flip-flop. And if we look at the current chart action, we note that last week's action did in fact, or this past week's action did in fact carry through and confirm that 2-bar flip-flop with higher prices. Although the narrow range bar of this past week doesn't lend credence to immediate up move. We might have congestion to start and then later in the week have a rally. Time will tell. Again, here's a chart I showed last week about all the buys we've had. We're still working an island reversal off these lows, and then you've had several great patterns at 2, 3, 4, and 5. 2 was a bullish engulfing bar. 3 was a breakaway gap. 4 was a yum break of the prior pivot high, and then currently 5 we're working this 2-bar flip-flop. Next, let's go to gold futures, one of my favorite markets. Gold continues to coil in a tight, well, maybe not so tight, trading triangle pattern here on these daily bar charts. We're still waiting for some kind of breakout, either caused by some event or a news story, or possibly the Fed lowering interest rates either next month or in some emergency meeting. Being a gold bull, I like to think that the breakout will be to the upside. And if we do get a breakout to the upside, where might prices go? I've laid out a couple of scenarios here, labeled A, B, and C on an upside breakout. Target A, let's zoom in a little bit. Target A is the width of the triangle. That is labeled in green. So we project that price from a breakout above the triangle high, and that puts up a target of $3,700. Target B in red is the wave into the congestion triangle pattern, and if we have that scenario, that puts gold at $3,950. And finally, my favorite is wave C marked in, let's go back, wave C marked in yellow. We see that has a target of $4,300. Where did I get that? That is the large wave for the entire year, which leads into this congestion pattern. So that would make a move of $1,700 or for the year, or 65% rally in 1 year, which would be fantastic. Next, let's go to crude oil futures. Crude oil futures are still working my pattern number 9 short signal from 2 weeks ago. This pattern was confirmed this past week with lower lows, and crude is playing on a break of a sideways congestion zone, which I've labeled in green with green lines here since last June. The width of that channel puts a downside target on crude oil at $60. A little lower, marked in, that's marked in blue. A little lower when that lower black line is $58, which is the highs of that major low back in March. Let's zoom in a little bit. Tuesday, Wednesday, and Thursday of this past week did form a 3-bar equilibrium where you have bar 1 goes down, bar 2 is sideways congestion, and then bar 3 is a strong rally. But Friday did not confirm that rally. I would say Friday negated that rally by falling pretty hard. So I think prices will still head lower for the next couple of days, if not couple of weeks. And I do have a $60 minimum target on crude oil. Next, let's go to soybeans. I've been calling soybeans very nicely lately. Of course, past performance is not necessarily indicative of future results. Historically, soybeans have fallen in the last 2 weeks of July, and that's exactly what they did. This past week, soybeans had a major bounce off of the lows of the 2 weeks ago, and this bounce was also the confluence of 2 support points. We see the blue line, which is the high of the low bar back in September of last year, and then the black thinner line is the trend line, which goes across the 2 lows late last year and early this year. You broke that level, and then 2 weeks ago you had a narrow range week with no real follow through to the downside. So that was your first clue. And then this week we just had a major rally up all week, and that sent prices strongly higher. I still think we're in a congestion zone, and I think short calls might be a play for a congestion or a pullback in prices, or maybe even just a drop in volatility, because last week was very volatile. Next, let's go to coffee futures, everybody's favorite drug. Coffee rallied hard this week. Over the past weeks, prices formed a Joe Ross 1-2-3 pattern. Please read my Substack post on Joe Ross. I released part 1 last week, and part 2 should be coming out this week. But we see a move down to 1, the immediate rally to 2, the retest at 3, and then at 3 it has a 2-bar flip-flop, which tells you prices are holding, and that was 2 weeks ago. These are weekly bars. That was 2 weeks ago, and that told you that this past week should be up, and it was. That carried prices up in a range expansion bar, which means it's opened at its low, closed at its very high, and its range was wider than the previous few ranges. I expect higher prices with a test of $3.80 to $4 on coffee in the coming days and weeks. Next, let's go to Bitcoin. Bitcoin reached all-time highs, but it was on an upthrust. We had a wide range up move to new all-time highs, but then the next day broke that day's high, turned right around and had a bearish engulfing bar down. And 2 days ago had a little bit of follow through to the downside. We are still working on the daily bars. One of my 9 patterns, this is a foreclosed reversal, which is one of my 9 patterns that signal a trend change. Prices have not bounced off these lows. Instead, they formed a narrow range bar with a lower low. I expect a retest of those early August lows down at 114,000. Then just wait for the market to tell us what's next. Will it break those lows, or will it rally up to new all-time highs yet again? I've been saying that it's time to get out of Bitcoin and get into Ethereum, and that has continued to play. Ethereum's looking very strong compared to Bitcoin. Actually, just very strong by itself. It's made new highs for this move. We're having a narrowing of the ranges. So I'm expecting a move back to the 3,900, maybe the 3,850 level in some type of mean reversion buy here. But I am still bullish Ethereum, and especially bullish in terms of Ethereum over Bitcoin. Here I've zoomed out on Ethereum here on the daily bars. We see that the daily bars have formed 3 down bars. This is over the weekend also. But we're having a narrowing of the ranges, so that tells me that the sellers are losing their strength. Let's zoom in a little bit here. So I expect prices to rally here immediately on Ethereum. Thanks for watching. I hope you enjoyed this. Please like and subscribe. Comment with any questions, and have a good day.